with some of the revision notes and some basic formulas for the LIFO reserve and LIFO liquidation. Okay, first of all we will look at the adjustments, and the first adjustment that we will be looking would be balance sheet adjustments. The first formula that comes to mind is that how we can calculate FIFO inventory. Well, it is simpler. Inventory LIFO plus LIFO reserve. So this is the basic formula that everyone is at least familiar of. But look at the other formulas. For example, how we can calculate cash FIFO. Well, we can easily calculate it if we know, of course, cash LIFO minus the reserve LIFO, of course, into tax rate. The third one, that what amount would go into retained earnings. Often in CFA level 2 exams this happens, that when they ask about retained earnings, students turn totally blank. How we can calculate it? Well, equity FIFO can be calculated by LIFO equity plus the reserve that is yet not deducted in the tax amount. Because look, if we look at the above figure, the cash FIFO equals to cash LIFO minus the reserve into tax rate, right? So when the equity amount is basically the amount that would be stored for future distribution, right? So equity FIFO equals to equity LIFO plus reserve into 1 minus tax. Now these are the only ratios that we discussed previously for of balance sheet, now of income statement. So for the income statement, the first thing and the foremost thing is COGS. COGS FIFO is equal to COGS LIFO minus change in reserve, right? An example could be, for example, if we know the LIFO COGS, that's of 50,000, right? And we are told that change in LIFO reserve is 8,000. So simply COGS of FIFO would be 50,000 minus 8,000, and that would be equals to 42,000, right? So this is the first formula that we discussed. Okay, the second formula. The second formula, as you all know, that what we deal in income statement is taxes, and nobody forgets about taxes. So taxes in FIFO would be calculated equals to taxes LIFO plus change in reserve into tax rate, and similarly after taxes what will remain, NI FIFO is equals to NI, that is net income LIFO plus change in reserve into 1 minus tax rate. Look, the procedure over here is also the same. For example, COGS FIFO, right, equals to COGS LIFO minus change in reserve, right? First of all, we will have this figure. Consider it as an independent variable that will be used, or as a constant K, for example. That would be used in all the figures, right? Change in reserve. This is income statement, so we would be using change in reserve. In the balance sheet, we have used what? We have used just the direct reserve figure. So you should remember this, right? The three formulas in balance sheet are all have this figure, LIFO reserve. You can deal it as a constant. In the first thing, what happened? We will just use the LIFO reserve, that is just a constant. In the second, in the cash FIFO, we would be using the reserve into a tax amount. So the tax amount of the reserve, the tax portion. And in the third, that is equity FIFO, we would be using the net amount after tax of the reserve. Similarly, in income statement as well. In COGS FIFO, when we are calculating that COGS FIFO, we are just subtracting the change in reserve, that's a constant amount. Similarly, when we are calculating taxes, of course, the tax amount of the change in reserve, and in net income, whatever remains after paying the tax, we would be adding that. I hope it is clear. Now, the important part, and that is the impact on ratios. That's the most important part. And believe me or not, when you know about this, and when you are able to do and solve these ratios and the effects, it's an easy A for the candidates. So now we are considering the impact on ratios. When we are making an adjustment from LIFO to FIFO, what will happen? The first ratio is current ratio. Because FIFO inventory would be higher, that is the ending inventory I am talking about, right? So current assets would increase, current liabilities remaining the same, so the overall current ratio would increase.